Okay, we've got the Tech Mahindra numbers out on your screen. That is the rupee revenue number. The dollar revenue has showcased a growth of about 0.5%. We're talking about 1218 on the dollar revenue front. Yeah, that's the number that we're talking about. Constant currency growth is about 0.4%. That's what they've done. So the dollar revenue number is more or less in line. I mean, a shade better, you can say, than the poll that Rima had shared with us. The question is EBITDA. So there's a 13.7% quarter-on-quarter increase in US dollar EBITDA. That's what we have in the US dollar terms. The Indian rupee EBITDA is up 19.3% quarter-on-quarter. EBITDA is 1619 crores. So if I'm looking at the right numbers, and on the EBITDA front, this seems a little
I think it's
positive.
coming higher than expectation on the EBITDA front. The EBIT is coming at 15.3%, which would compare with 13% a quarter ago, which means on a quarter-on-quarter basis, the EBIT has improved by 230 basis points. Correct me if I'm wrong, I'm just reading off the flashes there. So margins have come in higher than expectations, and Tech Mahindra continues with its trajectory of improving margins. In fact, margins for Tech Mahindra had hit a low of about 8.2% in Q4 of FY17. So compared to that level, we've seen close to about a 700 basis points improvement in margins. The bottom line is coming slightly higher than expectations, and that is on account of a forex gain, which is more than what the street was anticipating. And secondly, with respect to other margin performance, it is the dollar revenue and the constant currency revenue, which I think is coming lower than expectations. I think you told me a constant currency figure of 0.4%.
Yeah.
So 0.4% is actually lower than street expectations. We were working with a constant currency growth of 1 to 1.2% on a sequential basis. So 0.4% is significantly lower than that. So that is a miss. So net Tech Mahindra, it's a miss on revenues, but it's a beat on margins. We'll await more clarity. On the top line, what we need to find out is what the telecom sector, the telecom vertical's performance has been, because that is about 40% of their overall revenues, and the company had seen some very strong deal wins in the telecom vertical, so that was expected to have contributed to the top line. So has that taken place? And secondly, the non-telecom business was expected to be flat according to our poll. Has there been a decline there? Any concerns? And even at a 0.4% constant currency growth, while it's lower than expectations, it's significantly lower than what peers had reported. If you remember, Infy was at 4.2%, TCS was at 3.7%, HCL was at 3%, Wipro's adjusted constant currency growth was at 2.8%. So 0.4% is one, lower than expectations, and two, it's significantly lower than what the peers have reported. Let's get it. Yeah.
So I'll give you just some more details as they're trickling out through the fact sheet. They've added one $50 million client. They've added two $20 million clients. As I'm comparing this over Q2 over Q1, so the number of $50 million clients has gone up by at least one. That's what we have at the moment. And the contribution, I don't have the exact number of the telecom revenue, but the communication revenue contribution in the second quarter sequentially is also higher as part of the overall pie. From 39.6%, it's gone up to about 41.5%. Then what else do we have? We have the attrition rates coming through. So the attrition rate is at about 20%, 19% at the end of Q1, 20% at the end of Q2. But those are some of the other numbers. Rima, you want to take it away?
Yeah, let's get in some reactions. Harit Shah, Reliance Securities, joins in. Harit, two-part question. One, what have you made of the constant currency growth of 0.4%? And secondly, margins at 15.3% at the EBIT level.
Yeah, I think the overall revenue was definitely below what we were expecting. A little bit on a slightly disappointed. Hello, can you hear me? Hello.
Yeah, carry on, Harit.
Yeah, so I think the revenue was obviously came less than what we were expecting. Slightly disappointing. We were expecting 1 to 1.5%, somewhere in that range in terms of constant currency growth. So it's obviously come in softer than expected. It was expected to be soft in the first place, but need to understand, get some greater clarity in terms of vertical mix as to why this has come in, where it has. So this is, I think, clearly the lowest among all its peers, all the top five IT peers in the sector so far. Margins obviously were, they were very good. We were obviously, quite, positively surprised on the margin front. Obviously, rupee might have played a big part in that, and, waiting to see, what other factors would have led to the EBIT margin coming in, so at 15.3%. So we were expecting less than 14% EBIT. So definitely that is obviously a positive for the quarter.
Okay, let's get in some more reactions. We have Apurva Prasad as well joining in. Apurva, what would weigh on the stock tomorrow? Would it be the margin beat or would it be the revenue miss?
I think the revenue miss is probably more pronounced. There are a lot of tailwinds going in for the margins. I mean, there has been a decent beat on the margins, let me not miss that. But at the same time, I think revenue slowdown vis-a-vis peers, it's not a complete surprise considering the fact that management had talked about some slowdown with transition of large projects pertaining to HCI, more on the enterprise side of the business. I don't yet have the split between the enterprise and telecom, so it's really hard to tell what's driving that. So I think some more commentary on the growth, whether there are any one-offs pertaining to this quarter. I think we need to sort of get a fix on that. Yes, and if we sort of understand that the overall trajectory for enterprise business comes back towards double digits organic, I think that should be fine. We need to understand more in terms of how LCC is progressing. The network side of the business has been pretty sluggish historically. So I think these are some of the areas that one needs to sort of address before taking a growth specific call on Tech Mahindra. So I would want to hear these aspects for sure.
From the management commentary, we can't glean anything right now. All they've said is that there was a decline in the implementation business in our healthcare vertical, which we assume will be the HCI acquisition that the company did about 18 months ago. So that was anyway expected to post a sequential decline. So that is one factor that the company has highlighted, but that wouldn't come as a surprise. Urmil Shah of IDBI Capital joins us on the phone line. Urmil, how do we wrap our heads around the 0.5% dollar revenue decline for Tech Mahindra, just a 0.4% constant currency growth for the company this time around?
Yeah. So, Rima, the communication vertical growth of 4.3% in USD terms, that's in fact much better than what we were expecting. But at the same time, enterprise business has not been flat. It has declined by 3.6%. So we need to understand more on that front. If I just look at the absolute USD number decline of about $26 million and compare it with the others vertical where the healthcare vertical sits, then it appears that the others vertical is what has resulted in that decline. But we would want to understand more as to, weren't there any other part of enterprise segment which could have partially offset this impact. So that is one clarity we need to get, because Q3, the enterprise vertical will also have the furlough impact. So it would be very important to get clarity on that front.
Okay. So is there a case for EPS downgrades, Urmil? Or because of the margin beat, it should be okay at the bottom line?
I think it should be, the absolute EBIT is higher than what we were expecting. So yes, margin benefit or margin beat is taking care of the miss on the revenue front. So as of now, it does not appear that there should be a EPS downgrade. But as I said, we need to get more clarity on the enterprise vertical, because there will be the impact of furloughs going into the third quarter.
Apurva, it's clearly, the communication verticals has done well for the company. It's the other segment. What all constitutes in the other segment? One, of course, will be the healthcare vertical, which will have the HCI acquisition. What else could, is constituted in their others segment? And would you bring down your constant currency, the absolute constant currency growth expectations from Tech Mahindra for the full year?
No, so as I said, I think we'll wait out to hear the management first, in terms of what they're guiding and specifics to the decline, in this quarter before, really looking at our estimates. Again, on our absolute terms, whether it's EBITDA or PAT numbers, that do not change much. In fact, it's slightly better if I'm looking at the EBITDA as well as the PAT number. So, I mean, prima facie based on that, I really don't see a significant change to estimates, but I think I would probably reserve my comments till wait and hear management out.
And on what constitutes the other segment? Do you have clarity?
No, we need to understand that too. I mean, what's really driving that?
Okay, Harith, what about you? What all could come under this other segment? Because that's clearly the only pain point. All the other verticals are either flat or have managed to report some sort of a decline. It's the others vertical where the revenue contribution has come down from 13.4% to 11.2%. So that's a big decline.
Yeah, so I think, apart from, as far as others is concerned, you have healthcare, you've got bank, BFSI, you have technology, you've got retail also. So it's a number of verticals. We need to see the exact breakup as to what exactly has contributed. Retail has been under some stress within many companies, so that could be one possible likelihood. So we need to, I think we'll wait for that and then we can give a more informed comment.
Okay, Harith, Urmil and Apurva, thank you very much for joining in. We, of course, will touch base with the management and get all our questions answered. But a quick recap of the numbers. Tech Mahindra has disappointed the street with its revenue performance. Their dollar revenue has declined by 0.5% on a sequential basis. Their constant currency growth is at only 0.4%, much lower than expectations and significantly lower than peers who had managed to report a growth of 3% or even upwards of that. So Tech Mahindra disappoints sorely on the top line. One of the key reasons has been the healthcare vertical, where the HCI acquisition that they did was expected to report a sequential decline. That said, the communication verticals, which contributes about 40% to the overall business, has seen a fairly decent trajectory. Margins have come in higher than expectations, seen an improvement of 230 basis points, of course in part aided by the rupee depreciation, and the margin performance coupled with a higher forex gain is driving a bit of a beat on the profitability. But net, given the revenue miss, Tech Mahindra's numbers would go down as a bit of a miss. With that, we'll slip into a very short break. On the other side, Manisha Gupta will join in with all the commodity action. Stay tuned.